a late session rout on the market. There you have, just about there is when the tariffs were announced, just around about 12:30, 12:45, and then the market goes right around. The lowest point is just after 2 o'clock. And after that significant fall we saw on Wednesday, it's been a miserable few days. Just look at the numbers. You know, we may not have had those 1,000-point moves, but the volatility, you've seen moves of at least 300 points in the last 5 sessions. This is the week so far. 400, 300, nearly 400. And that has been the mood. That volatility has just basically maintained its momentum. I'm joined by Mark Rosenberg, who's with me. He is the CEO and co-founder of GeoQuant. Good to see you, sir. Thank you for coming and putting some perspective. Now, you're a startup and you're analysing political risk in real time. Yep. Specifically, you have the Mueller risk index.
We do, yes.
Before we talk about the Mueller risk index, yes, how do we factor in something like this? A tariff trade. I mean, it's not Mueller direct.
No, but I think it's a classic example of a politically driven sell-off. I think our indicators, for instance, have been showing this kind of thing for a while. This administration has been pursuing policies that up till now have juiced the equity markets. But the flip side of that, I think we're seeing now the populist trade policies. We've seen concerns about inflation. We've seen concerns about U.S. debt driven by the same set of policies. And now I think the market is waking up to that reality.
How serious is this volatility of the last week? Because after February, where we saw 900,000 points, we sort of take 300 to 400 points in our stride.
Right. Well, I think, yes, in recent history, but given, you know, beyond that, we've seen a period of historically low volatility. I think all this arrival of volatility is really market volatility matching the political volatility. And now the political volatility, I think, is starting to drive market volatility.
There has always been a feeling of fragility,
yes,
in the recent market, in the last few weeks. The one comment I've said again and again is you just get the feeling it's waiting to fall over.
Right, exactly.
Are we now starting to see it crumble?
I don't know if it's going to crumble. Economic fundamentals are still strong. There's some financial fundamentals are still strong. I think to the extent politics drives markets, and that could be another tariff announcement. It could be a big bang development in the Mueller investigation. You're going to see a negative impact on equity markets.
So talk about the Mueller risk index. How do you calculate it?
Well, we measure U.S. political risk every day across a wide range of factors. What we did for the Mueller index is extract the data most relevant to the investigation and construct an indicator of the risk of the Mueller probe to the Trump administration, to the strength of the...
So this is not an index that about necessarily how it will affect stocks?
No, what we did is take that measure of impact on the Trump administration and then run that against stocks and run that against the dollar.
So if we take Mueller at the moment, after the 13 Russians and then the Manafort and now the Gates guilty plea, where do we stand with the Mueller risk index?
So it's at an all-time high since Sessions recused himself in March, and that's when we started the index. We still see it peaking over March and then stabilizing a bit. But I think really it all depends on the midterm elections when you think about the long term.
Right. But now factor that Mueller, because it's nice to know in a sort of esoteric sense that there's a great political risk out there.
Right.
But it's pretty useless unless you can tell me how this is going to affect my portfolio.
And that's exactly why we measure it, I think.
So tell me, how is the current state of what we're told that there is a state of chaos in the White House at the moment. How is that likely to affect markets?
Negatively, to the extent politics impacts markets. And of course, there's a lot going on in markets besides politics. But given that variable, it's going to have a negative impact on the markets. Thus far, it's had a positive impact. You've had tax cuts, you've had regulatory reform. I think now you see the downside of that.
And it's not easy to see that there would be a simple way to unwind that. I mean, look, this could get a great deal worse before it gets a great deal better. If I understand you correctly, that's exactly what you're saying.
From the political standpoint, yes.
Good to see you, sir. Thank you very much
for having me. Yeah.
Thank you.